Hi. Welcome back. Thanks so much for joining us. Really appreciate it. We are very excited to welcome today Sammy Armenia. We were just talking about this in the beginning. The same thing, the Italian pronunciation, Armenia, excuse me, from C21. Very excited to dig into what has been going on in C21 and, of course, talk a little bit about the cannabis landscape because we always say it's never boring and it never is. Thanks, everyone, for just joining. Again, we want to welcome you into the conversation. So if you have any questions, comments you want to throw out, you are very welcome to do that in the chat. We take them on every platform except for Instagram. Thanks so much. I always see Stevie in there as well, which is great. And yes, it'd be awesome. All right. Well, Sammy, how are you doing? I know we were chatting a little bit in the pre-show, talking about Italy, talking about a ton of stuff. How are you feeling?
I'm doing well. It's really hot here. We're having a heat wave, which is not common in June in Canada. So melting a bit, but doing well.
We are also having that same heat wave. I don't know if it's like the East Coast side of things, but it's been tough.
Yeah.
And you guys had, your same working day yesterday. I know in the US we had a little bit of a break, which is interesting. Yeah. So a regular week for you, but I guess different for everyone else, which is interesting.
Are you in Maryland like no one? Yeah.
Yes. So I live very close to the Maryland border. So I'm in DC technically, but so close to Maryland. But yeah, it's great. Oh no, poor Jane.
I have a ton of family there.
Oh, no kidding. Whereabouts?
Yeah. In the suburbs.
Okay. Yeah. It's a great area. Well, again, if you're ever out visiting them, stop by, say hi.
Awesome.
All right. Well, then I figured I know most people I feel like who are joining, who are following the cannabis story, know you, they know what you do and all that stuff. But I thought it would be kind of nice to do just a little zoom out, little level set a little bit.
Yeah.
Talking about your background, how you got into cannabis, how you got into C21, all that stuff. So I'd love to start there.
All right. Well, I have a interesting path to this sector. I was actually in film and television for quite a while. I'm older than I look, so previous career. First I worked for CBC, which is our public broadcaster here in Canada, and then I was on kind of Hollywood feature films on set for years. So I did some cool stuff that way, but I got tired of it and kind of shifted gears to both finance and geospatial analysis. So I did kind of a post-grad, went back to school. This is a long time ago. And I got in a really bad car accident here in Toronto 12 years ago. And I spent many years rehabbing, long, painful process. And I have kind of permanent damage, but I manage now. But I was looking for pain solutions away from the opioids, right? Because I kind of couldn't get out of bed without opioids. So started researching cannabis, kind of came across, Todd's work, CB1's work, the Twitter crowd. This is now like 7 years ago. And then the investment opportunity kind of showed up. Obviously, this is the height of the Canadian LPs. We all did well in that until we didn't. But then became exposed to the MSOs, and I started doing some sharing some analysis and research on Twitter /X. And I kind of got connected with Bruce McDonald, our chairman, through sharing some of that stuff, and we met and kind of hit it off. He's been mentoring me since. He brought me on a few years ago as VP of Corp Dev, and we work kind of side by side running corporate, capital markets, M&A, that whole side of C21. Obviously, we're a smaller company, but we keep really busy on that end of things. It's amazing because the investors and the retail investor tends to only hear about an M&A once a year, once every couple of years in these companies, right? But you're working at this stuff every single day, and you get to you get close to the finish line, probably 9 times out of 10 doesn't make it. So, I think it's not appreciated how often companies are engaged in this and how often it doesn't work. And sometimes that's a good thing.
Probably a lot of times. I feel like it's sort of like the same thing with sales. You're reaching out to 100 people that went down to 20, and then you end up sort of making that through. But it's important to kind of constantly, like you're saying, be surveying where the opportunities are, what makes sense. And
it's a small community, right? There's not that, I mean, especially with the publics, there's not that many of us. So you tend to, know everybody, and you keep checking in, whether it's the bankers, the analysts, the other C-suite in the space. You keep having those conversations and engaging, reading the language, where everybody thinks the sector's at, what everybody's goals are right now. We had probably taken a different route than most companies to get to where we sit today. While everybody was kind of really actively pursuing, let's call it just growth generically, planting flags in new states, acquire a lot of M&A, from, let's say, 2018 to 21, 22. We were kind of head down trying to fix our balance sheet and trying to right-size the company and doing a lot of the things that we're now hearing, the Crescos of the world, or like the companies in the space doing now, or, what they've been working on in the last year or two. We were kind of doing that 5 years ago. And it was, we had a $30 million senior note. For a small company like us, it was pretty substantial. We also had some other debts, a debenture back then. And so, we just weren't in any position to kind of, grow, to be blunt. So we kind of focused on operational efficiency. Our CEO, Sonny Newman, really, made this company what it is today. When he came on in 2019 as our CEO, he had vended in Silver State Relief, which is the first licensed operator in Nevada. And, he's been running this since 2019, and he's done a remarkable job. And we are the only publicly traded cannabis company that's had 5 consecutive years of free cash, positive free cash flow. That's even after tax adjusted for anything accrued. So, we were the only company in the space that didn't do any financings from 2019 till 2024. Like, we really just put our heads down and focused on running a self-sustaining business and fixing our balance sheet. We completely delevered our balance sheet, paid off that senior note, which is the size of our market cap. So it's pretty
crazy,
pretty substantial. And, in this last 12 months, let's say 12 to 18 months, we really started focusing on, okay, what's next? Which is, what we hope is the new wave of growth for this company. So we started really pursuing, first we expanded our cultivation in Nevada. We kind of doubled what we produce, to set us up for adding more retail, essentially, on the fully vertical stack. And we finished that cultivation expansion. We thought we were close on a number of dispensaries over the last 18 months. We finally got there. In March, we announced that we acquired one of Deep Root's big dispensaries in South Reno, 6,500 square foot, purpose built in 2021. It's like the location couldn't be any better. We're really excited about it. It's adjacent Walmart, Supercenter. It's in the newest burgeoning kind of area of Reno, throughway right beside us. I mean, just everything you want for traffic and for parking and for size. And our model is, we tend to run really big stores. We have those previous stores, 6,500 square feet and 8,000 square feet, run at like a 12.5 million per store run rate. And the state average is 7 million. So we're almost double the state average with our stores, with our 2 kind of legacy stores. So this will be our 3rd store. The city of Reno just approved this a few days ago. That was the final for closing. So we will be kind of grand opening in the next week. We're just getting the signs up and all the fun stuff, getting it converted to a Silver State Relief. And we're really excited. And I get a lot of questions, whether it's on other spaces I do or on X. People ask, what's the new store going to do? We don't really guide, but what I can give you is, if you're conservative and you say the state average run store is 7 million in annual kind of revenue, C21's 12.5 million per store. But say you're conservative and say 7 million. You can kind of realize how much operational efficiency we have with this store because we already grow to support a third store. We actually grow enough for 2 more stores. So 50 to 60% of our products, we have 700 SKUs in our stores, and 50 to 60% of our products are in-house. So because that kind of COGS is going to be light, so to speak, because we already produce it, there's a lot of benefit to the margin and benefit to the bottom line. It's also going to be a pretty light OPEX because this is in Northern Nevada where we have our whole team. You're essentially taking on a lease, bud tenders, maybe a store manager, but it's really quite light in the OPEX. So we think there's going to be a tremendous boost to our bottom line. And obviously that's going to remain to be seen on what the top line is and how much flows to the bottom line, but we think it's going to be significant. So we're really excited. We did a small financing. We did a convertible debenture at the same time, and we actually did less than we needed for the sale purchase price of this. We used kind of a quarter of free cash flow, and then we did 2.9 million in a financing to close this essentially. But that's only it's under 7% of our shares out. So it's if you think of it I think it's 6.89% of quote unquote dilution for 50% expansion of our retail footprint. We see it as an extremely accretive, both at the top line, but then we think it's even more so on the bottom line and the boost to the margin. So we have to obviously go out and prove it now.
Yeah, that's still, again, very exciting. And again, especially in your role to get that done and knock that out, I feel like is a huge thing. So congratulations on that front.
Thank you.
Jane has a great question, which is kind of talking through it a little bit more, which thanks, Jane. With the acquisition of Deep Roots, given how long it takes to ensure that it's a good fit, is there potential to acquire some of their other locations? Is it sort of easy to kind of plug and play and say, if they've got other locations, they're probably something you'd want to look at? What's sort of the thought there? Thanks.
Oh,
yeah, great.
Jane and I are we're good friends away from the sector, so I'm just teasing her. No, I can't comment on any specific company on conversations. What I can say is we are very much actively pursuing the next acquisition, and we will continue down this road of retail kind of expansion in Nevada because it's where we see the most return on investment for this company. We have probably, I don't know if you know this, we have 100,000 square foot indoor cultivation facility. We've only built 40% out. So we have the ability to kind of, buy stores and keep that equilibrium between our production, our cultivation, and our retail footprint as needed. You really want to keep that equilibrium. Nevada's not a great wholesale market at all for any of the companies. So you want to have as much equilibrium between your cultivation and your retail. We had expanded early, and so we actually had to get into the wholesale market while we were waiting to get to a place with retail expansion, and it was not fun. It hurt our margins, it's just there's Jane. Sorry,
yes, that's great.
So we continue to actively pursue retail expansion in the state. There are a lot of the big MSOs are already have a huge footprint in the state. I think probably half of the 100 licensed dispensaries in the state are run by the big MSOs. So you're more looking at the independents, the privates, just to find a good fit. This one was a remarkable fit in its location, in its size, and kind of fitting our Silver State model. We're not allergic to going to the southern end of the state, to Vegas. We think because it's such a dramatic, I think it's 5 or 6 hours to get there. They're not close at all. So you probably have to have a team, a second team. And in order to do that, you don't really want to buy like a $2 million run rate store, on the fringes of Vegas, because it's not going to carry having a second team. So we're looking for some scale in that type of next move, so to speak, to kind of support a full second location. You can almost think of them as two different states. Obviously you don't need different licensing, but they really are two different states in that, California is much closer to us than Vegas is.
Yes,
So,
different environments. I think there was a trivia question about what is more west of, I think it was like Sacramento or something like that, and one of them was Reno because it's so far you don't recognize
it's
how
so
far
far.
it is over.
Yeah.
I'll have to find that question later. But okay, interesting. But yeah, definitely agree. Vegas, different market, different competitive levels. I'm sure there as well, on top of just our costs and everything else, which makes sense.
There's two markets in Vegas because there's the kind of tourist strip market, and then there's the locals, right? I mean, it's the biggest population for Nevada by far.
Yes.
Actually, the two biggest cities are basically Vegas and North Vegas, Henderson. So that's where all the people live. That's where all the jobs are for the most part.
Sure.
But Reno's Reno's really growing. It's one of the biggest, I think it's second in building permits in the US. So it is a burgeoning kind of city in the States, and there's a lot of opportunity. And, the Tesla Gigafactory is close by, actually right in between our two stores, right dead center. So there's a lot of industry up there.
Yeah, and I think a lot of people who probably need to relax. I feel like if you're like working at Tesla, probably stressful, high intensity environment, you probably want a little cannabis at the end of the day. Okay, that makes sense. So again, focusing very much in Nevada, just because you think that that's the best opportunity and the best sort of state in a lot of ways for you guys. Are you guys also monitoring sort of other states and kind of keeping an eye if it were to crop up? And what's the balance? Okay.
Yeah. I mean, because you're constantly talking to other companies in the industry that may have exposure to other states. So, and obviously there's the Ohios and the Floridas and all the ones that the focus is on right now that you're definitely keeping an eye on. As medical kind of converts to adult use, there tends to be that huge jump in revenue, right? So you're definitely looking at those opportunities for sure. But for us, this industry is so difficult to navigate. And as you know, there's no capital. So you really have to be strategic with what you do, and you have to make sure you don't take missteps, right? Yes. And we have positioned ourselves really well to be on offense, but you don't want to make a mistake at this point in the industry.
Yes, it's sort of like that cautious optimism, but sort of careful, not aggression, but careful sort of forward. That makes sense.
Yeah.
Have you, in terms of like M&A in general, have you thought, or is there an eye towards, partnering up with other companies in some ways, whether that's, footprint related? Any thoughts? Sort of.
We have all those conversations.
Okay, you got to keep it always.
If I always say if one of our investors has an idea, we've already probably explored it 10 times. Yeah. Right, because that's all we do. So yeah, we look at private, publics, other states, multi-state operators, bigger companies, like everything you can think of, we have those conversations for sure.
Yeah, that makes sense.
And look, this industry is going to go through consolidation at some point. I think right now, I think most people thought the consolidation was going to come sooner, but where we stand right now, capital is too expensive, right? A lot of, let's say at least 50% of the companies have balance sheet problems right now. Near-term maturities on debt that has to get refinanced. We all have this 280E kind of question in the balance. Yeah. We're one of the only small guys, at least of the publicly reporting ones, that fully books 280E. And in doing so, we paid $7.3 million in the last 3 years in 280E. Sure. But we accrued just as much, a little bit more actually, kind of almost a half and half. And looking around the landscape, you're seeing a lot of companies file for the backdated refund. And in our most recent filing, financials, our preliminary year end, we did say that we're looking at it. So I don't have any update on that, but we are, I think GTI said that as well. A couple other companies said, keeping an eye on it and trying to figure it out if it's the right move.
Is it sort of waiting on other, hypothetically competitors or other companies to try to see if it works for them, and then there's sort of an easy path there, so you don't have to fight that fight? It's sort of an easier pathway, or is it more just sort of, I don't know, what's the?
It's doing your research. It's talking to, getting legal opinions. talking to other companies that are going through this process, right? Figuring out the cost of it, like
it's so complicated.
and what the fight's going to be down the road, because there will likely be a fight down the road. You're almost just resetting the clock and buying time, and what you hoped for, at least, I don't want to put words in other companies' mouths, but I think what most are hoping for is by resetting the clock, buying time, biding some time. By the time these things come to, say, a court case, we're going to have a lot more clarity on Schedule 3, on is there any, retroactive 280E. Like, we're going to have a much better understanding of. There's also the Boys lawsuit, right, which will probably drive a lot of that. And we will probably have a lot more information to make these decisions. So, my understanding is that for the most part, it's just reset the clock, put it on your long-term uncertain tax position, right? You don't really want to take any refund and go spend it, because there's a chance you're going to have to pay it back.
And more, yes, that's true.
Right, with penalty and whatnot. So all of these things are being weighed.
So again, it's that sort of same approach of not wanting to not make a mistake, but not overextend yourself in some way, and take that very not cautious approach, but sure-footed approach, I guess, ultimately.
You have to in this industry.
Yeah,
I really do. I mean, we've seen it time and again, not to name any companies, but we've seen companies kind of go beyond their skis, and there's a lot of companies reeling right now, trying to figure out how to right size. Having to sell assets they probably don't want to sell.
Sure.
We understand all of it. We went through it. We closed. We were in Oregon. We were a 2-state operator, and we had to,
pivot out.
Yeah, pivot out of that state because again, Nevada's where our profitable model is, and it makes far more sense for us to put any capital into that state where the returns are so high for us.
Yeah, I think I totally.
5 years of free cash flow. There was a guy on X, I can't remember which handle it was. I want to say Green Wave or something. He did a chart on free cash flow in the last 5 years, and we had generated the 4th most free cash flow in the industry. We're a tier 3, like we're a small company, yet we punch way above our weight class, right? So that's our differentiator. That's what our model is. And we're going to continue down that path. And we think this new store is really going to boost that bottom line. And obviously then that affords us the ability to do more, right? The more cash we can generate, we don't really have any, big debt. Viridian just put out a note this morning on the tier 2s and 3s credit kind of tracker, credit ranking. And they had us as the lowest leverage in that basket. In the space. So, profitable and not being leveraged is a good combination to be able to grow. Yeah. And, a lot of people are now asking about the buybacks, because we now see 2 of the tier 1s, take this approach. We're not allergic to that as well. Right now we are in growth mode. So we're hoping we continue to find accretive assets and expand, try to hit a critical mass in Nevada, like 10 to 15% market share. I think that's what, we really want to strive for right now. But we did a buyback last year. We were actually the first to do it. We did a synthetic buyback of the earnouts on this company. It was about 4% of the fully diluted stack of this company. We used free cash flow. We retired them at, what we think was a very accretive number, and retired them. So canceled them essentially, because they weren't yet in the market, but they would eventually, come to market. So we thought it was best to get rid of those, and
apply that.
We're always looking to do smart things for shareholders. You've had Bruce on before. We are a very shareholder kind of friendly company. We have the exact same 120 million, 47,814 shares out that we had at all-time highs. Yeah. Like we are very, very, I would say we're a leading steward of capital in the space, right? We're very cautious and thoughtful in our approach for our shareholders. Obviously, that doesn't necessarily translate to stock prices in this industry.
In the short term, you'd think, right? I feel like in the short term, things will move around, and we've seen that. We've seen the volatility, but in the long term, you'd hope that companies play out.
It's crazy. I mean,
Yeah.
yesterday the entire industry traded $800,000.
It's hard when the US is closed. Yeah, it's bizarre. How do you manage yourself that, because I know you're not a stranger to it. I feel like, having been in cannabis for a bit, you understand that things can move crazy in the short term, and that's just part of the deal. But you can continue to find that growth and that sort of footing as you go. But how do you sort of separate yourself from the emotion of, ugh, this is crazy that it's been so up and so down, but we're getting all these things that are moving us closer, and we feel like we're getting closer to some actual kind of turning a corner? How do you manage that yourself? I don't know.
I invest in companies that are self-sustaining, that generate cash, that have a path regardless of when federal reform happens, that can make it with 280E. These are kind of my, I would call it a conservative approach. I'm not really looking for, I don't want to swing for the fences and miss. This industry is too difficult as it is. So there are enough companies now in this industry that are generating cash, that have a path, a self-sustaining path, that aren't over leveraged. And that's where I tend to focus my investing dollars on. I'm not a trader, right? I have a day job, as you know. So I'm not looking to kind of play the volatility in the space like a lot of people in our Twitter echo chamber are, right? So that's, yeah, I mean, I've shared a lot of analysis on X about what I think these companies are worth on an intrinsic value. Obviously, that changes if you're not paying 280E. It changes if we get reform that hopefully opens up capital markets and we can re-engage kind of growth as an industry, because right now everybody's a bit turtled, right, and reeling a bit. And the market's kind of probably telling us that there's no clarity. I think there's no clarity in what the path is right now. That's not to say it's not going to be a favorable path. We just don't know yet. And the market doesn't like uncertainty, right?
Yep, of course. What do you think we're on better footing post July, 22nd, where we're closed up with the comment period for the DEA stuff? We're kind of getting some sense of, okay, I think it's 30 days estimated post comment period. So maybe actually 30 days beyond the 22nd.
Yeah, can they get there?
Yeah.
Can they get there on time?
Yeah. Do you think even that is enough to kind of stabilize things, or just, I know there will be volatility. I don't want to say that there's never going to be volatility again, because there definitely will be volatility in cannabis. But do you think that's the thing that the market kind of needs to see to say, like, okay, this is happening, this is moving forward?
I think the market's also scared about the uncertainty of the election and what if Biden loses, what the other side, what their stance is. Right? Are they hands off? Are they states kind of rights, or do you get another attorney general that comes in and blows up the Cole memo? Right? Like we don't know what we're facing, and I think that's where the caution is right now. There's no new investing capital kind of flowing into the industry right now because of that. I think that's really all it is. There's some speculation on whether it's also this hemp kind of war, the cannabis versus hemp, and hemp's obviously eating into the market share, even though it's unregulated and untested. And what's the loophole in the Farm Bill? Is that going to close? I mean, all of these kind of questions are looming right now, and there's no clear answers. So I think there's too many unknowns. There's too much uncertainty for the industry right now. It was already hard to attract capital to the space because of whether it's the exchange, the listings on lower exchanges, no senior listings, and so we have to roll with it, right? I mean, there's nothing that any individual company can do to kind of combat this. I mean, I think what some companies can do, they're doing, and there is some outperformance. There's some bifurcation in the equities, and maybe that's telling us something. Some companies that have been showing more growth are actually outperforming. So maybe the fact that the bigger companies in the space stopped, really the growth really slowed down, really turned a lot of people off of the industry, and that needs to kind of ramp up again. There's a lot of reasons we can posit on why the space is doing what it's doing. You need incremental investors, and I've always maintained in these interviews, 95 to 99% of the broader investor pool doesn't even know these companies. It doesn't have access.
Yeah, I was going to say, is it an ignorance thing of not knowing really about it and not having as much coverage? Even though I do think the scheduling component and Biden kind of elevating it does kind of bring it into people's consciousness,
Yep.
or is it sort of a hard to get into, waiting for something to get
Both.
Okay, both. All right.
Larger funds that have to adhere to compliance. There's no way in. We've seen it, right? In fact, we saw some of the larger funds get kicked out in 21, 22 and stuff. So we need some sort of safe banking, some sort of codified safe harbor for financial institutions, for the capital markets. We all speculate on whether there's a DOJ, a Garland memo that can kind of button this up for us, whether we need safe banking to finally pass. I know that's almost a swear word in the industry now.
It is. Yeah.
It's frustrating.
Yes.
It's frustrating for the companies. It's frustrating for the investors. I try to remain objective about what's going on and why it's going on. I know there's a lot of anger and frustration, and I completely get it. And people tend to, we're rational, logical beings, right? We tend to want to understand, why is this happening? Who's to blame? What's the reason? Why did I get this wrong? And it's just this weird, perfect storm of, conditions that created an industry that's somewhat deficient on the capital markets.
That's true. Oh, sorry, good.
Yeah. Well, the large ETF in the space is much larger than the industry, right? So it's a challenge to have a unique kind of circumstance that way, right? Because traditionally ETFs are smaller than their components, than their underlyings.
Yes, that is true. Not the case. I think, well, I feel like that's got to resolve over time. And I know we're seeing, like you mentioned, the lawsuit, scheduling of court, there's so many things that are teeing up to kind of not normalize, but just make things, I guess, kind of normalize, make things act like normal companies, normal industries, all those different things. So I feel like that has to come. Again, I also agree. I don't know on the safer specifically front, how that goes through, but I do think the banking component should get resolved.
It's absurd.
Yeah.
It is absolutely absurd that these companies, some of the third-party debit providers were actually, one of the big ones actually closed at the end of 23 and forced thousands of dispensaries back to cash only. This is insanity. It doesn't make any sense. There's no representation right now in government for 500,000 employees in the state legal employees. It's just crazy. I continue to hear stories about people not being able to get mortgages, insurance. It's such a challenging industry on so many levels. And then you have the hemp, kind of what looks like, the loophole and the workaround.
Yeah.
Delta 9. How's that fair?
Out of curiosity, how do you think that goes? Do you think that does get kind of closed up and then there is some regulation that gets overlaid for hemp, kind of similar to cannabis in some way? Or how do you think that plays out?
I wish.
Okay. More. It's fair. It's hard. Yeah.
It's hard. Logically, you would assume it has to kind of get closed and then they have to regulate that industry, or, the beverages kind of gets treated differently. There has to be clarity on this stuff, but you can't have two completely, they're essentially the same plant, and you're selling essentially the same product, but one's synthetic, which is actually untested and unregulated and probably not very safe. Yeah. And that's the one that's being shipped around the country. It doesn't make any sense. Yeah. Eventually you think reason has to prevail and things have to kind of become more normal. So hopefully we'll see that happen. All right. Well, so again, stuff you can't control, that's going on. Yeah.
It's still moving. For the stuff you can control for this latter half of 2024, your focus seems very much in Nevada. What else are you guys kind of concentrating and holding on to as we're?
I'm impressed by the fact that, there's been price compression in virtually every state, but Nevada is one of the more mature states that's had that price compression. It was really affected by inflationary pressures, kind of the consumer spend. That market's kind of unique because it's so tourist driven, and COVID kind of threw a wrench in all of that, and I don't think it ever got back to what it was pre-COVID, the Nevada kind of tourism. So I look at our numbers and I'm so impressed with the fact that we've maintained 500,000 customers a year through our 2 doors, regardless. Like the stability in our business model is remarkable. Really what you've seen, and it's across is a combination of a smaller basket size. Are people buying less? Do they have less discretionary, dollars in their wallet to spend? Is it a bit of the price compression? Is it a combination of both? So if you have a basket size that's $10 less, but you have the same customer count, or in some cases you have more transactions, right? More unit volume, but price is down. And really, with the normalization of this industry, that's what's going to happen, right? Prices are going to kind of settle out what we see in these mature states. Let's call it $1,000 a pound. It varies, right? You got to be able to make money in that world. It's really hard with 280E. There are very few companies that are able to do it. We're fortunate to be one of them. But as that price normalizes in all markets, what you're going to see is an increase in unit growth, right? Like the volume is going to come from the normalization of the industry, more form factors, right? More demographics are going to be reached, and the demand is there, right? And we see it waning in alcohol and other vices, right? We see the kind of migration of demand, and look, it's safer, it's healthier. Like, we can go through all the reasons why that's the case. Whether it's a person that's looking, like in my case, for a pain solution that's safer than opioids, whether it's a person, looking to have a good time but not wanting to have the hangover from alcohol. I mean, there's so many reasons why people are gravitating to cannabis. Sleep. We saw even with the HHS and the FDA kind of research, 215 pages or whatever, right? They really think that the neuropathic pain has the strongest potential. And it's such a massive market, right? Chronic pain is such a massive market to tap. Obviously, that's controlled by pharma. So then there's a lot of that kind of conspiracy concern of, do they try to stifle this industry, stealing market share from, there's
a lot of conspiracy.
We're in the Wild West.
It's true, but I think ultimately you're right, and speaks to the fact that cannabis is here to stay. The trend and the momentum towards cannabis for whatever you're using it for seems to be increasing. People seem to be realizing, hey, it's not the DARE era. It's not going to kill you if you, try a tiny bit. That is regulated, tested, safe, all that stuff. But again, so I think we're just getting there. We're taking those steps. We are getting closer, which is great. Frustrating that we're not there already, but again, in the meantime, operating as best you can. And
I can argue that there are a lot of companies that are doing better now than they were doing at all-time highs. I mean, you really have to separate the business from the stock. I know it's cliche to say, right? But there are a lot of companies, GTI as an example. I use them in every example I ever use. Everybody knows they're kind of the bellwether of the industry and the most profitable company in the industry, right? I mean, they're in a much better position now than they were 3 years ago, but they're not being treated that way, in the market. So why? Is it the uncertainties of the future of this industry, the unknowns around, scheduling, the unknowns around interstate commerce, the unknowns around hemp? When is uplisting? How do you answer these questions? I think they take the right approach. They put their head down and just focus on, being a better operator every single day. And that's what we try to emulate as well, because those are the things you can control. But when $800,000 invest in the space yesterday, right, with the US side closed, it's a ghost town. It's a ghost town, to put it politely. it's a real challenge, right? We don't have the incremental investor. We have to open up to a broader investor pool, and the likelihood is that's going to need some sort of uplisting, right? For access for larger institutional flows. But I was looking this morning at NVIDIA, and I know you can't compare cannabis with mega cap tech and stuff, right? But they have increased their market cap by $2 trillion this year.
It's crazy. And
I was doing just some quick math on that. So the cannabis space traded $800,000 yesterday. If I gave you $1 every second, in 10 days, you would have 800 grand, okay? NVIDIA's increased 2 trillion year to date market cap. If I gave you $1 every second, it takes 65,000 years to get to $2 trillion.
Yeah, it's a huge difference. But again, hopefully we'll be trading
I'm saying the sheer scope of kind of capital pools, right? And what's available to NASDAQ and NYSE and kind of the broader, and I'm not saying that the mega cap investors are going to, flock to a CPG kind of new industry, right? We don't know, but we don't have access to any of it. We don't have exposure to any of it. So it's, and credit to some companies who've tried to figure out a path, TSX, right? Everybody's trying to navigate this as best as they can. And I think the retail investor is very critical because performance is lacking, right? And I understand that, but I don't necessarily think it's all these companies are at fault and they keep making mistakes or anything. I think they're doing the best they can to continue to pivot with the new information that comes their way and the challenges and the changes in the industry. And that's really all you can expect or hope the team that you're investing in to do. Yeah. And to try to protect the shareholder really through it, right? That's all you can hope for. And I think we all know that this industry is going to have its day. Maybe some people are losing faith in that. I'm not at all. This industry will have its day. There are companies that should not be priced where they are right now. And you hope that intrinsic value kind of comes, the voting machine, weighing machine kind of elements of this industry right now. We're in a place right now where it's not a popular industry to invest in. And, the volatility in the industry, I've talked a lot about market mechanics, algos, arbitrage, all the things that are going on in the space and why we're seeing the price action that we see. But ultimately that will take care of itself when this industry gets kind of opened up.
Yeah, I think that's fantastic. Perfectly said. All right. Well, Sammy, thanks for taking the time to sit down with us. I feel like it's just great to kind of get a check-in on what's going on the company side, but of course, hit Nevada a little bit and then just sort of generally what's going on in cannabis. Because sometimes it's nice to just take that little check, take that step back and kind of look at it from a high view, which is great. So appreciate it.
Thank you. I appreciate it.
All right. Thanks everyone for being on. Really appreciate it. Oh, okay. Shoot. One last thing. I saw Fred's question coming real quick.
I'm in no rush.
I just want to get it real quick. Are you seeing unregulated testing hemp in Nevada specifically?
Yeah.
Yes. Okay.
Yeah. And I think Nevada faces both that challenge and the challenge of California being so close and kind of the illicit market filtering. I mean, we see California products showing up in East Coast states, right? But Nevada is a border state. So you see that kind of show up everywhere. So you're always facing those kind of challenges until this market is kind of regulated in a more fulsome, comprehensive way, right?
Yeah.
You just continue to navigate it the way, you can. And I think we're doing a remarkable job doing that. So
fantastic. All right. Well, perfect. Thanks for getting that last question. Really appreciate it. I'll let you enjoy the rest of your day. Thanks for being on. Appreciate it. And we will catch you next time. All right. Thanks. Bye.
Cheers.
Before investing, carefully consider the investment objectives, risks, charges, and expenses found in the prospectus, available at advisorshares.com.